Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Ever.Ag's Global Insights team. And Steve, we're back with this week's update. Just going through a few of our brief market updates. There's been a little bit of movement. GDP pulse, which is interesting this week. Some US demand indicators and, of course, chat of the week. Let's start with skim milk powder, Steve. And the NZ SGX futures have just weakened over the last week, just moving down there, that darker line. Not a whole lot from the prior week. And we've seen a similar story on the EEX, just a bit of weakening of those futures last week with that just gentle curve upwards.
A bit more milk in both regions, maybe the expectation.
Yeah, it could be. Yeah, things just seem to have relaxed a little bit, haven't they, in the market?
So staying in Europe, the butter market is weakened, but really reverted back just a couple of weeks, really. Spot and official prices around 7,000 euros a tonne. But, generally, this is a very gentle climb down, if you like. There's certainly weaker sentiment, and it seems the pressure on availability is evaporating.
Just interesting to look at these over-the-counter trades that have been booked in the latest week, Steve. We've got this interesting dip just leading into Q1 26, well below where the futures are sitting at the moment with those trades. That was for the week to Monday. Butter trading as low as 6,500 euros a tonne out there, Steve, which is interesting to see if that comes to fruition in the futures.
So staying with butter in the US is certainly lost a bit of ground in this last week. The spot market drifting down to near $2.30 a pound. It's the lowest since early May this year, but lost, in tons terms, it's dollars a tonne. It's, $400 a tonne in the past week in the September to November futures. It's a bit of an average.
Yeah, now just looking at non-fat dry milk again, weaker on NDM, and that's really following the lead, I guess, from the other two exchanges, Steve. Just a bit of a relaxing in that skim milk powder, non-fat dry milk market.
Yeah.
Looking at cheese futures now in the CME, US cheddar firmer in the short term. We have seen a couple of rallies in the last couple of weeks in spot as well. Spot clawed up to $1.88 a pound. Best since the second week of June, Steve. Probably a combination of still pretty good news on the export front, a lot of confidence there given the discount to our competitors, and also some better domestic signals, which we'll get to.
Turning to GDT, Joe, and surprisingly, we've got some news on the GDT. Bang. So cancelled due to a technical issue. No further information on that. Apparently the event got underway but couldn't be completed is all that's been announced.
Yeah, we've never seen anything like this, I don't think, in the whole history of GDT. So
No.
see what transpires.
So with that update, where does it leave us? So just comparing last week to this week, which is where skim milk powder comparisons were last week. This week we see New Zealand and US both weaker, as we saw, and then butter.
Butterfat, this is last week, just where everything was sitting in terms of the X much higher. And this week, in the US dollar comparison, forward prices for the EU have softened, and the US market is also much weaker. So still that pretty substantial spread, Steve.
Yeah. I'm curious as to whether this puts further pressure on AMF.
Yes.
So less likelihood of Northern Hemisphere being in market.
Sure. So look, just comparing the projected fair values of EU mozzarella, and that's based on butter and skim milk powder futures. US markets has been a little bit stronger, so that gap has narrowed a little bit. The EU has been weakening, but skim milk powder forward values are sort of holding this up a little bit, Steve. So interesting to see that gap in the next couple of months. And now you've got it in US dollar terms.
Yeah, just probably a little in the short term, a little less than desirable for the US to continue their success. But when you get out to Q1, we're up around 30 cents a pound, which is in the meaningful range for that to make a difference.
Sure.
And speaking of the difference, so this is in trade data that was published by the US and New Zealand for June. We featured a bit of analysis of this in our Directions newsletter last week. But looking at the monthly changes, just that's the monthly year-on-year growth of exports into contestable cheese markets, CCMs, as we call them in the legend there. So you can see, New Zealand has been consistently stronger, and really when we got, we were at the end of Q4 before we saw this really heat up. So New Zealand has grown in the first half of 25. Their growth, year-on-year growth into these markets is up 27%, 46,000 tonnes. The US a little bit behind, but catching up quickly, Joe. You see that hollowing out period that occurred a few months back where the US just sort of stalled in this effort. But now that's ramped up. And it's interesting that virtually all the growth in the US expansion in recent times has come from these markets. So they are very important, with Mexico being slightly weaker. So at that 29,000 tonnes represented all but 1,000 tonne of growth in total US exports in the 6 months.
Yeah, it's going to be a region to watch, isn't it?
It is.
Regions.
Some US demand indicators, Joe.
Yeah, some interesting. We're sort of in season for a lot of results to be announced at the moment. So we saw some improved signals from big US fast food. Burger chains or burger results remain a bit mixed. McDonald's has flipped the script in terms of same-store sales, best in 5 quarters. And looking at the results announcements, that's really all about the promotional deals that they've been offering, very low price deals to attract those customers back. So
that's where it swung.
Yeah, absolutely. And just looking at Papa John's too, a very important pizza chain in the US, also above the line for the first time since Q4 2023, Steve. So that's encouraging in terms of cheese demand. We like to see pizza chains doing well. And just looking at the Placer.AI data, that also seems to support, it definitely supports the results that we've seen, that we're just seeing a bit more traffic into those top pizza chains across the US just before we look at that seasonal decline as the weather moves. Burger chains, not so convincing, is it? It's not going quite as well. They're all eating at Chili's, apparently. That's the top chain and consistently in the top of all chains in terms of this Placer.AI data.
Just that different cuisine offering is really catching. I think we see that in our own home market here too, Joe. The Tex-Mex flavour is catching, and here it seems Big Burger's missing out.
Yeah.
Looking at retail sales data, not so good in the latest data, published into the first week of August, showing year-on-year volumes of dipping in cheese and in butter, dragging down some of the later comparisons as well. So that's one to watch. This stepping back a bit, this is looking more broadly, a different source of data, more broadly at the dairy category and in retail. And you can see just cheese just about, 1% year on year. Frozen pizza is thawing quickly. That's a terrible pun I made there on that slide, but never mind. As the drift now, we've seen the big pizza and fast food picking up. This is where it's losing ground here. So some people are trading back up, you'd think, to a more expensive option, which they probably missed. So there's less cheese on these products in retail, so that will help.
That's a net positive in terms of cheese demand.
It is, yeah. Hopefully that'll eventually improve unit values across the chains, different outlets. You can see yogurt is still very strong, continuing to benefit from the protein story.
Sure.
Chart of the week, Joe.
Yeah, look, now for something completely different, Steve. We're going from the consumer end to the before the farm end, in fact. We're just looking at some European soil moisture charts here. These are from the Drought Observatory across Europe, and they're an indicator of dryness in the soil. And so the red areas are basically alert, orange is warning, and yellow is, we're a little bit worried about this. We want to see green. But this is the end of June, and just fast forward to the end of July, Steve, that's a very different picture. A lot more areas of red and orange than we've seen. We've seen extremely hot conditions in parts of Europe, but a lot of that red moisture area is really in the east, in a lot of cropping areas, Steve. Yeah.
So we'll intensify. This is 2 weeks old now. So we've just seen that the heat waves are getting worse. So this will probably darken as we go forward. And, as you say, most of the consequence might be for later cropping and feed. The issue comes to roost later in the year, in the winter stored feed. So problems down the track, but certainly in the short term, we'll see some stress. Well, that wraps us up. Thank you very much for watching. We'll be back again next week.